The very word secrecy is repugnant in a free and open society. And we are, as a people, inherently and historically opposed to secret societies, to secret oaths, and to secret proceedings. We decided long ago that the dangers of excessive and unwarranted concealment of pertinent facts far outweighed the dangers which are cited to justify it. Even today, there is little value in opposing the threat of a closed society by imitating its arbitrary restrictions. Even today, there is little value in ensuring the survival of our nation if our traditions do not survive with it. And there is very grave danger that an announced need for increased security will be seized upon by those anxious to expand its meaning to the very limits of official censorship and concealment. That I do not intend to permit to the extent that it's in my control. And no official of my administration, whether his rank is high or low, civilian or military, should interpret my words here tonight as an excuse to censor the news, to stifle dissent, to cover up our mistakes, or to withhold from the press and the public the facts they deserve.
Board today?
Well, I have long been in favor of abolishing it. I think there is no institution in the United States that has such a high public standing and such a poor record of performance.
What did Arthur Burns think of that?
He didn't like that very much. But needless to say, I didn't hesitate to say it to him. Look, the Federal Reserve Board was Federal Reserve System was established in 1914, started operation in 1914. It presided over a doubling of prices during World War I. It produced a major collapse in 1921. It had a good period from about 1922 to about 28. Then it undertook actions which led to a recession in 1929 and 30, and it converted that recession by its actions into the Great Depression. The major villain in the Great Depression was, in my opinion, unquestionably, the Federal Reserve System. Since that time, it presided over a doubling of prices during World War II. It financed the inflation of the 1970s. On the whole, it has a very poor record. It's done far more harm than good.
The third indispensable element in building the new prosperity is closely related to creating new jobs and halting inflation. We must protect the position of the American dollar as a pillar of monetary stability around the world. In the past 7 years, there's been an average of one international monetary crisis every year. Now, who gains from these crises? Not the working man, not the investor, not the real producers of wealth. The gainers are the international money speculators. Because they thrive on crises, they help to create them. In recent weeks, the speculators have been waging an all-out war on the American dollar. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators.
Thank you, Mr. Chairman, and welcome, Chairman Bernanke. I am very pleased to be here today as the ranking member, and in the midst of the great optimism of monetary policy and how the economy is doing, I still have some concerns. And of course, one of my long-term goals has always been to emphasize maintaining the integrity of the monetary unit rather than looking superficially at some of our statistics. But I also share the concern of the chairman of the committee of our responsibilities for oversight and your interest as well, Chairman Bernanke, on having the transparency that I think we all desire. Transparency in monetary policy is a goal we should all support. I've often wondered why Congress has so willingly given up this prerogative over monetary policy. Congress, in essence, has ceded total control of the value of our money to a secretive central bank. Congress created the Federal Reserve, yet it had no constitutional authority to do so. We forget that those powers not explicitly granted to the Congress by the Constitution are inherently denied to the Congress, and thus the authority to establish a central bank was never given. Of course, Jefferson and Hamilton had that debate early on, and the debate seemingly was settled in 1913. But transparency and oversight are something else, and they're worth considering. Congress, although not by law, essentially has given up all its oversight responsibilities over the Fed. There are no true audits. Congress knows nothing of the conversations, the plans, and the action taken in concert with other central banks. We get less and less information regarding the money supply each year, especially now that we don't even have access to M3 statistics. The role the Fed plays in the President's secretive working group on financial markets goes essentially unnoticed by Congress. The Federal Reserve shows no willingness to inform Congress voluntarily about how often the working group meets, what action it takes that affects the financial markets, or why it takes these actions. But all these actions directed by the Federal Reserve alter the purchasing power of our money. And that purchasing power is always reduced. The dollar today is worth only 4 cents compared to the dollar that the Federal Reserve started with in 1913. This has significant consequences on our economy and our political stability. All paper currencies are vulnerable to collapse, and history is replete with examples of great suffering caused by these collapses, especially to the nation's poor and the middle class. This can lead to political turmoil as well. Even before a currency collapses, the damage done by a fiat system is significant. Our monetary system insidiously transfers wealth from the poor and the middle class to the privileged rich. Wages never keep up with profits on Wall Street and the banks, thus sowing the seeds of class discontent. When economic trouble hits, free markets and free trade are often blamed, while the harmful effects of a fiat monetary system are ignored. We deceive ourselves that all is well with the economy and ignore the fundamental flaws that are a source of growing discontent among the various groups. Few understand that our consumption and apparent wealth is dependent on a current account deficit running at approximately $800 billion a year. This deficit shows that much of our prosperity is based on borrowing rather than a true increase in production. Statistics show year after year that our productive manufacturing jobs I think they finally cut me off. Is it on now? Okay. This phenomenon is not seen as a consequence of the international fiat monetary system where the United States government benefits as the issuer of the world reserve currency. Government officials consistently claim that inflation is in check at barely 2%, but middle-class Americans know that their purchasing power, especially when it comes to housing, energy, and medical care and school tuition, is shrinking much faster than at 2% per year. Even if prices are held in check, in spite of our monetary inflation, concentrating on the CPI statistics distracts from the real issue. We must address the important consequences of the Fed manipulation of interest rates. When interest rates are artificially low, below market rates, insidious malinvestment and excessive indebtedness inevitably brings about the economic downturns that everyone dreads. We look at GDP figures and reassure ourselves that all is well, yet a growing number of Americans still do not enjoy the high standard of living that monetary inflation brings to the privileged few. Those who benefit the most are the ones who get to use the newly created credit first.
The gentleman's time has expired. If the gentleman would come to a conclusion.
Okay, I will yield back.
Well, we've known since the mid-19th century what you do when you have a financial crisis. The central bank has to supply liquidity on demand. They have to be a lender of last resort. So we know what Bagehot argued was that you lend without limit. You really have to lend to almost everybody. You lend against good collateral, and you lend at a penalty interest rate. Look, the financial institutions were in trouble. There was no reason to hide that. They should have been forced to come to the discount window. Instead, what the Fed did is it used a series of special facilities where basically the reserves were auctioned off to bidders for the funds. So I think that wasn't done in the right way, and it also took the Fed a bit too long to realize that it needed to do this, be a lender of last resort without limit. The second thing that was problematic was that they lent against really anything rather than against good collateral, which was the recommendation. What this meant was that we're not necessarily lending to healthy banks, because the thinking always had been that yes, you need to lend, but you don't use this as a way to bail out insolvent institutions. You're supposed to be lending to solvent but illiquid institutions. By lending against any kind of collateral and possibly lending against trashy assets, you could be confusing a liquidity problem with an insolvency problem, and I think that is exactly what the Fed did. And the third thing was they did not lend at a penalty interest rate, they lent at highly subsidized interest rates, so far below market rates rather than slightly above market rates, which is what they were supposed to do. So in all those ways, the Fed deviated from fairly well-established procedures for dealing with the financial crisis. So the other thing the Fed did was that almost all of this took place behind closed doors. Even though the crisis went on and on and on. Now, I think there's a very good argument that in the height of a run on banks, you do this behind closed doors. You do it quickly, and then later you can talk about what you did. But in the heat of the moment, you don't talk about what you're doing. But of course, the crisis went on for years, and the Fed refused to supply any information about what it was doing until finally Bloomberg, a news service, used the Freedom of Information Act to sue for the information. And Congress started getting upset about this too, that the Fed was refusing to tell our elected policy representatives what it had done. Finally, the Fed released the data in raw form in 29,000 pages. Bloomberg did some analysis of it, and then two of my graduate students who were working on a Ford project with me went through the data in detail and found out that if you add up all the loans that originated in these special facilities that the Fed had created, it totaled $29 trillion. That gives you an idea of how bad the crisis was. Okay, $29 trillion of lending, and in some ways we're still not out of this. The other thing was that this was not short-term lending to resolve a liquidity crisis. It went on for, some of the lending went on for 4 years. A lot of the lending went on for 2 years. So we're talking about a very long-term problem in the banking system. Again, this does not look like a liquidity problem. This is an insolvency problem. So it sure looks like the Fed was lending to insolvent banks that probably should have been resolved, that is closed down, rather than kept open. The other thing is we've begun to look in detail at the interest rates that the borrowers paid. They weren't just below market, they were unbelievably low interest rates, a few basis points in some cases, lots of loans well below 1%. So this sure looks like, again, what the Fed was doing was subsidizing their activities so they could get very cheap sources of funds hoping to work their way back to solvency. And this is not what a central bank is supposed to be doing. You're supposed to shut down insolvent institutions. So in all those ways, I think that what the Fed did is really not consistent with established policy.
The committee. Let me begin my summary of my written testimony in support of H.R. 1207 by recalling a controversy that erupted in late 2008. Bloomberg News ran a headline, "Fed defies transparency aim and refusal to disclose," and the article dealt with trillions of dollars in loans whose recipients and whose collateral that had been put up were unknown to the American people. The editor-in-chief of Bloomberg News, Matthew Winkler, stated it very simply. He said, "Taxpayers, involuntary investors in this case, have a right to know who received loans, in what amounts, for which collateral, and why specific loans were made." Well, he's right, of course. There's no good reason for Americans not to know the terms and recipients of these loans. There's likewise no good reason for them to be kept in the dark about the Fed's arrangements with foreign governments and foreign central banks. These things affect the quality of the money that in our system Americans are obliged to accept. Now, this seems like common sense. So what are some of the common arguments that have been raised against 1207? Well, it would compromise the Fed's independence. And eventually, if we open the books, this will lead inexorably to some kind of influence over monetary policy being exercised by Congress. I think this is a red herring. The bill neither envisions nor calls for any such thing. In fact, the bill is not designed to have Congress have any authority over setting interest rate targets or any such thing as that. This is part of the Fed's central planning apparatus, and it's best to keep this away from the Fed or Congress, in my judgment. But ultimately, all we're doing is looking to open the books. Congress has a moral and legal responsibility to keep tabs on and keep the public informed about the various creatures it brings into existence. So these various convoluted scenarios by which merely opening the books will eventually lead to a floodgate of an inflationary catastrophe at the hands of an uppity Congress, I think are a little over the top. Now, at the same time, we hear this objection all the time about the Fed's independence, so we should investigate that issue. How independent is the Fed? Well, how independent could it be if the Fed chairman is, of course, routinely up for reappointment? The chairman typically wants to ingratiate himself into the favor of the president and often will accommodate him with loose monetary policy. Moreover, try to imagine a Fed chairman who doggedly insisted on maintaining the value of the dollar, even if it meant refusing to monetize a massive deficit to fight a war or so-called stimulate a depressed economy. You can't imagine it. So if there is any truth to the idea of Fed independence, it's in precisely this, that the Fed, as we've seen in recent years and months, has the ability to extend trillions of dollars to unidentified recipients on undisclosed terms. Now, if that's what we're talking about, I find it hard to imagine any self-respecting American who isn't bought and paid for hesitating for a minute to challenge that. Now, we've also heard that this type of legislation might politicize lender of last resort decisions. Well, again, it does no such thing. You'll find nothing in the text of the bill to justify that suspicion. But even if it did, how is this a departure from current practice? I think most Americans, you're going to have a hard time persuading them that the decisions made regarding the various bailouts were all made entirely with an eye to the public good and entirely disinterested and were not political at all. I think some Americans, and this ranges from progressives all the way to traditional conservatives, have rather a different thesis in mind, which is that, for instance, Goldman Sachs just might have a little more political pull than the rest of us. Well, let me also make clear that supporters of this bill are not interested in a watered-down version of the bill. This would only further stimulate suspicion that somebody is hiding something. Now, it seems to me the audit is coming. The writing's on the wall here. 75% of Americans polled agree that the Federal Reserve should be subject to the GAO audit that 1207 has in mind. If the legislation should fail, well, it seems to me that we will only further stimulate interest in transparency in the Fed, because people who up to this time hadn't had any interest in the issue will begin to wonder what could they be hiding. So I think it's probably best for the Fed simply to accept that the audit is coming. I think that would be a more dignified way of handling the situation than what we've seen from the Fed thus far, which has by and large been the approach of urging Americans, urging the peons who populate the country to quit pestering their betters with all these impertinent questions. I think the Fed should take to heart the words that Americans hear every time a new federal surveillance program is uncovered. If you've done nothing wrong, you have nothing to worry about. Thank you.
The very word secrecy is repugnant in a free and open society. And we are, as a people, inherently and historically opposed to secret societies, to secret oaths, and to secret proceedings.
Now, who gains from these crises? Not the working man, not the investor, not the real producers of wealth. The gainers are the international money speculators.